RBC Wealth Management's George Gero and Kitco Metals' Peter Hug join us today from Orlando, where they are taking part in the International Precious Metals Institute Conference, otherwise known as the IPMI, and one of the most important in the precious metals industry. Thank you, gentlemen, for joining me today.
And thank you for having us.
Pleasure, Daniela.
Well, let's talk sentiment, as gold is really at a crossroads here, and we're trying to figure out direction as we're around the 1270 mark. When just last week, I had people on so confident that we were going to hit 1300. So, George, let's start with you. I know every year you do some sort of informal survey of the attendees of the IPMI, looking to gauge market sentiment. So where are people seeing gold?
I think they're somewhat cautiously optimistic, as many analysts like to say. In other words, they're modestly bullish. And they're modestly bullish because of the uncertainties all around the globe. The worriers, as I call them, are concerned with North Korea. They're concerned with Brazil, Venezuela. They're concerned with what's happened in the Middle East with Qatar. They're concerned with the political environment around the globe. Brexit, for example, has gone awry. And in the United States, we're going to see some more political discussions when the budget talks resume. And of course, gold has been pausing because they're 2 days ahead of the Fed meeting, which is scheduled to raise at least a quarter point. But the quick and dirty of it is, will they do something about the balance sheet as well?
Peter, I see you smiling and nodding. Are you feeling the same way?
Yeah, pretty much. I think George has covered most of the area. I think one of the issues that I have, and I could be a surprise, I'm not sure George agrees with me on this. I mean, it appears evident that the Fed may go on Wednesday and go a quarter point. But they have some reason maybe to be hesitant here. And, one is the sort of the meltdown of the FANG stocks, and it's now, spilling over into the Dow as some of the fund managers are selling other positions to generate some cash for margin purposes on the NASDAQ that has taken a pretty big hit over the last two trading sessions. And, you've got a Trump administration that's still mired in this FBI investigation, so it becomes questionable whether the Republican Party can get back on track with their tax reform and their health reform. So there's now more questions in the market relative to U.S. economic growth going forward. So I suspect the Fed may still go on Wednesday, but I think they may be a bit cautious in their hawkish tone going forward until they see some of these policies come into play. And, if you take the Fed out of it, you take the upward slope of the interest rate curve out of it, I can understand the sentiment leaning more towards a bullish sentiment than a bearish sentiment, which I would lean towards on an upward sloping Fed curve.
Okay, and when we're talking
Peter.
Sorry, George, go ahead.
Yes, I agree with Peter. Today you had a big 10-year auction. The Fed did it at 219. Now, before a meeting and before the notes come out, that I think is pretty much tells you what Peter has been telling you. And then after Peter replies to this, I'm going to talk to you a little bit about this informal gold survey that I take each year when I'm here, because I find that the vast majority of people have been opting for over 1,300 by year end.
Well, that's what I want to talk about now. Numbers. We were so confident about 1,300 last week. Is that still on the table, George?
It's very much on the table, especially after option expiration on the 25th of the month, because I've seen the options build up. You have a lot of 1,200 and lower puts, and you have a lot of 1,300 and above calls. And should we get to 1,300 around the 25th, and should we close at that level, Comex options become futures contracts. All the people that sold the calls in order to finance buying puts are going to be squeezed.
And Pete, we were also talking about if 1,300 was a possibility, then perhaps we could see gold move to 1,500. Do you agree?
Well, I don't know if I'd be as aggressive as 1,500. I tend to trade steps here, and we were looking for gold to close above that 1,292 level last week, and it failed. if we get to 1,300, I know it's a big number, and from an options technical perspective, I certainly agree with George, but the number itself, 1,300, I don't think is a major barrier. If we get through 1,300, I'd want to see a close above 1,327, which then makes me more constructive into sort of the mid to high 1,300s. You know, before I put a $1,500 number on the table, I'd want to see a lot more technical momentum build into this market before I put that number on the table from a short-term perspective. So, you know, again, this is going to be a staged rally. This is not going to be a 2008, 2011 shoot where, you know, you've got, you know, $400 or $500 in the market over a year and a half. This is going to be up, then back, and up and back, and it'll be staged, and it'll be depending on the news bites we get.
And George,
and the surprises could come from silver, palladium, platinum, and copper.
And I want to get to that in a second, but you know, paint a picture for us of who these attendees are. You know, I know it's a mix of refiners, people working in the jewelry industry, right, at the IPMI?
Yes, the majority, we have about 550 delegates in round numbers from about 23 countries, and that's a pretty well-attended IPMI year. And it looks to me like you've got a lot more people coming from Europe and a lot more people coming from the Far East. And I think that has to do with the fact that this year IPMI opened up branches in Europe and in the Far East.
So how many people did you get to speak with?
I spoke to a lot of people, and I have approximately 45 people that I surveyed, the members of the executive committee, members of the board, refiners, recyclers, jewelry people, and most of them are north of 1,300. A few of them are way below 1,100 to 1,200.
All right, and Pete, George just alluded to it before that there's a lot of buzz about palladium, copper, a huge palladium move last week. Is there one precious metal that people are expecting big results from?
Well, I mean, we've been relatively, well, we've not been relatively, we've been very constructive palladium for the past year. What's happening now is we've got a definitive squeeze in the palladium market. There's just no plate to deliver against futures. You know, the refineries are, for example, one of the major refineries in North America is shutting down for about 2 or 3 week hiatus in about 2 weeks. So this is going to become problematic. You've got palladium in backwardation, serious backwardation right now, trading some $20 over the active futures contract, which is September, with wholesale spreads now ranging anywhere between $20 to $40 in the wholesale market. That's pretty unusual for palladium, those types of spreads. So I consider, I think more volatility is in store for palladium. Silver, you know, I've been very constructive silver, but again, it's not going to move on its own here. I think silver needs to have gold lead the way, and it needs to close constructively, in my opinion, over 1755 before we see the you know, the market trade in the 18s.
All right.
We looked at silver yesterday, and there are a lot of people here who are seeing other applications for silver, and it has to do with the solar panels.
Right. We've been hearing that for quite some time. I'd like to thank both of you for coming on today. I wish I were there with you in sunny Florida.
It's not that sunny.
Well,
there's
a heat wave in New York, actually, so I can't complain. Thank you both.
Thank you for having us.
And
pleasure being here.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow. Hey.